Hello and welcome to the College Investor Audio Show. We're so glad you're hanging out with us today. Let's take a look at this Education Freedom Tax Credit. Who qualifies and when do they qualify? But first, just a quick reminder, anytime you hear a podcast, you can also find the article associated with it at thecollegeinvestor.com. You can also get to know us and allow us to help you along in your journey wherever you are. You can ask questions and everything. Just following us and liking us on social media at The College Investor. Search for those words and you'll find us. All right, let's get to it. So the U.S. Department of Education and Treasury, both departments, released new details on the Education Freedom Tax Credit, which was kind of a centerpiece of President Trump's Working Families Tax Cuts Act. Administration officials describe it as the single largest expansion of education choice to date, with the potential to steer billions of dollars toward private scholarships and education services outside traditional public school funding streams. Unlike all the past education tax benefits aimed directly at families, this credit works by encouraging taxpayers to contribute to nonprofit scholarship granting programs, or SGOs, which then distribute that aid to eligible students. The design, a little complex, just a tiny bit confusing, and the rollout will take some time, and its impact will vary by state pretty sharply. But for families, the key question is not whether the credit exists, but whether and how it will be available where you live. Okay, let's do a quick snapshot. How does this whole Education Freedom Tax Credit work anyway? Well, at its core, this credit allows individuals to claim a federal tax credit up to $1,700 for cash contributions made to approved scholarship granting organizations, or SGOs. A tax credit reduces federal income tax liability dollar for dollar. Credits are better than deductions. Makes it way more valuable than just a deduction. It only lowers your taxable income. Always go for credits. These SGOs are nonprofit organizations that must use at least 90% of their funds for K-12 education scholarships. Pretty cool. Those scholarships can be applied to a broad set of education expenses tied to public, private, or even charter schools. Examples include private school tuition, tutoring services, classroom supplies, career training equipment, and support services for students with disabilities. The program is structured as a three-step pipeline. States opt in, taxpayers contribute, and students receive scholarships. There you go. States that choose to participate must formally elect to become covered states and publish an annual list of qualifying SGOs. Taxpayers then donate to one of those organizations and claim the credit when they file their federal tax return. Simple. Kind of. If a taxpayer cannot use the full $1,700 credit in a single year, any unused portion can be carried forward for up to 5 years. Any U.S. citizen or resident can claim the tax credit if they make a qualifying cash contribution to a listed SGO in a participating state. There are actually no income limits for donors either. So who can receive this scholarship? To receive it, students have to meet income and enrollment criteria. Eligible students must be eligible to enroll in a public elementary or secondary school and come from households earning no more than 300% of the area's median gross income. That threshold is relatively high, in a lot of regions actually, meaning, quite honestly, most middle-income families in participating states could qualify for this. Scholarship amounts themselves are not capped at $1,700, while donors are limited to that credit amount. SGOs can pool funds and award larger scholarships based on their mission and the needs of students they serve. Which states are participating in this? There are 23, it means, quite a few are not, that have opted into the Education Freedom Tax Credit. I'm not going to list 23 states, but here's just a few. Alabama, Georgia, Indiana, Iowa, Louisiana, Montana, Nebraska, North Dakota, Ohio is in this, Texas, Virginia, and West Virginia, and even Wyoming. There are more. It's just you can find the list inside this article. Sadly, state participation is voluntary and it's a little bit uneven, as you can tell. Less than half states in the whole U.S. are participating, and families will not have access to scholarships unless their state completes the opt-in process and starts approving these SGOs. Taxpayers will not be able to claim the credit until they file returns for contributions made on or after January 1st of 2027. Treasury and the IRS are still drafting implementing rules following a request for public comment issued in December of 2025. So here's what this means for families. So if you're in a participating state, the program could expand access to education services that have historically been out of reach. Administration estimates suggest that the credit could generate, the key word there, it's the administration estimating as much as $24 billion in education funding annually if it is widely used, that's a big if, with every $1 billion in scholarships potentially supporting tuition for like 77,000 students or tutoring more than 300,000 students. Just estimates from the administration, so, there's some politicking going on there. How that translates to real help, it's just really going to depend on local conditions. In states with existing wait lists for tutoring or scholarship programs, SGO funding could reduce those backlogs. In other states, scholarships may primarily flow to the private school tuition or enrichment services. So the flexibility of allowable expenses, too, just means that families could tailor their support to their child's specific needs, whether that means after-school tutoring, specialized disability services, or even career-focused programs at the high school level. The administration emphasizes that scholarships can supplement public education rather than replace it, particularly for students who remain enrolled in public schools but just need some additional help. All right, what comes next? So this tax credit is not immediate relief by any stretch. Families and donors will have to wait until at least 2027 to even start making those qualifying contributions, and states have to complete all the administrative steps well before then to ensure SGOs are approved. For now, though, the most important actions are just informational, just so you know what's going on. Families can monitor whether their state opts in. Again, we have all the 23 states, and we will keep it updated, track which SGOs are approved, and assess whether their household income falls within those eligibility limits. Probably pretty safe. Taxpayers interested in claiming the credit will need to plan those charitable contributions strategically once the IRS guidance is finalized. The Treasury Department has said additional rules and instructions for taxpayers, charities, and states will be issued this year. Pretty cool stuff if it all kind of falls into place, but you never know. If you want to keep up to date on this, you can always check this article out at thecollegeinvestor.com. Ask questions. We'd love to answer whatever we can and help you along in your money journey wherever you are. You can follow us all over social media. We're pretty much anywhere you are. Just search for The College Investor and you'll find us. And thanks again for stopping by today. We will talk to you again real soon.